Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, December 18th. We're looking at the SPY ETF's market profile here on Window Trader. And M period certainly does not disappoint as we basically trade the entire day's range. Look like we might price probe to the downside just like the IWM and triple Qs did, only to hold it by 2 cents and absolutely rip up, take out G's high, which would have been the afternoon rally high, and settle towards the upper end of the day's range. Amazing. Absolutely amazing. Actually, I think the settlement, when they finally do it, it's going to be down around here, around 369 and change. But it's been bouncing all over the place. Excellent volume today for the first time in a while. 101 million. We haven't done 100 million in a while. So it was nice to get that done. Good day overall. Excellent trade in G period, which I'll go over in a minute. But let's first look at the other indices and see how they fared. So the Russell hits an all-time high today, only to really flush out and go out with a trend day down. They have a set of singles in L, and I believe they might have 1 or 2 ticks in K. Not sure. But the good news is they're still one-time framing up for 5 days. Look, it's not surprising the Russell wants to take a rest. It's done nothing but basically go straight up. So, but they do end up with a trend day down. Triple Qs, like us, had a B shape. Theirs got a little ugly. I'll show you mine in a minute. Again, it was a B shape for a good part of the day before L&M kind of distorted it to the downside. But again, you have to take that with a grain of salt, I think, because of how L&M are. Only to rip back up. They actually had single prints in L that got filled, and look where they're trading right now. So they had a chance for an outside day down after making an all-time high, but they close inside of yesterday's range. SPY, is it a B shape? Again, it stretched it a little bit, not as bad as triple Qs did, but the way M ran up kind of distorts it. But all in all, I think for the most part, this was just long liquidation from weak longs, especially weak dividend longs. Because when this market opened, again, we opened on a small dividend gap, filled it, and then drove straight down. So what happened in A, B, C, and D was anybody who was long for this dividend got nervous because not only weren't getting paid, they were going to give back the dividend and more. So I think a lot of them flushed out, and then shorts piled on. I thought we would end 9 wide because it was a B shape. We don't. We only end 8 wide. Thought we would hold the afternoon rally high. We don't. So all we have to lean on for today is today's high and today's low. As far as my trading, so I traded next Thursday's expiration, Christmas Eve, December 24th, because Monday, Wednesdays, and Thursdays prices were pretty much similar. So I said, well, let's go further out. So I took a long in a period. Once we got down around J's low, I'm like, you know what? This thing is driving down. I think it's more a case of weak longs from the dividend getting out. I bought the 369 calls. Actually turned out to be a loss. I got out of it. It was a small one. It wasn't working. I said, forget it. I'm getting out. I did do it again in B period, though, which worked out. We took out A's low. Once I saw we weren't going to have single prints, the tempo got less. I went back in on the 369s and rode those back up. That worked. Now, B period, I thought was going to be as high as accepted price because where A closed, B actually opened a penny or two above it, and then we never saw it again until obviously this craziness in M period, which basically wiped out that highest accepted price. So the long worked in B. I did it again in C. Yes, we're one-time framing down, but each new low we made was getting right back into the day's range. So I took the 368 call in C period. Now, D opened, got back up to C. I was like, are we going to take out C's low? I'm like, it's good risk reward. I took the 371 puts. It did not. Came back in, wrote it. Now, I didn't ride it all the way back down. I wish I did. But I wrote it back down and had a decent trade in D. Now, the best trade of the day by far was G. I'm like, once E was an inside bar, once F took out E's high, anybody who was short down here starts running. So that's what happens. Shorts start running, then you get the momentum buying. I was like, as long as we don't take out B's high, I'm comfortable being short. Took a 20 lot, added 30 right at the high, and then rode it back down and basically held it as it took some back off at POC, some back off at G's low, some at F's low, and actually the rest of it I took off at F's low at the time, but it went through G and H. It was a very best trade of the day by far. Those were the 372 puts. Then I took a long in J to fade the new low, which worked out. And that was basically it. I was going to, a couple of times, I was like, I was going to fade a new low in K or L. I was like, I've had a good day, I'm going to watch it. And then M just absolutely did what M does. That's why M period, the day of, is so misleading at times. So misleading. So unless we gap higher or lower on Monday, I certainly expect M's range to come into play, big focus on Monday. Okay, destinations for Monday. For the upside, all we have is 3 destinations. That's today's high of 371.15. 4 destinations. Then we have 371.72. Remember, ES got theirs because they gapped higher and then went down and took out the POC. We had the dividend, so we never traded there. So it's still an upside destination for me. 371.72, 10 wide. And then yesterday's high, 372.46, which is now a weekly high, an all-time high. And then 372.50, which is our overnight high from yesterday. For the downside, so they have us closing at 369.18. So our first upside destination is $2 away. Our first downside destination is today's low of 367.02. So that's over $2 away. So unless we get a gap on Monday, M's range is going to get shot. There's going to be a tremendous amount of chop inside of M. Expect that. Now, below today's low, we don't have anything to 365.92, which is a daily low. Then 364.47, which is this week's low, and incredibly important because obviously we're one-time framing up for 7 weeks, although we're not getting a lot of distance away from previous weekly highs. And then below that, we have another weekly low of 363.26 and filling the gap at 363.12. And I'm going to show you why that's important on the charts. Let's get to the charts. So monthly. Monthly's healthy, one-time framing up for 2 months. The key for the bulls, they want to stay above 364.38. Right now they are above it by about $5, so still pretty healthy. Nothing wrong with that. Weekly. One-time framing up for 7 weeks. However, look at these 3 weeks. Just like these 3, we didn't get distance. But then we went bull again. Even though we're still one-time framing up, right? We didn't get a lot of distance, and then we got distance. Well, now again, these 3 weeks, we didn't get a lot of distance. So are we basically resting to go higher again, or are we going to take out this week's low? If we take out this week's low should fall. It's not going to be easy to take out 2 weekly lows pretty easily if we finally stop the one-time framing up. And that's going to be very important because if we do that, then we're inside the prior all-time, last month's all-time high. So we would be back inside last month. We'd be back into balance on the weekly. And then more importantly, on the daily, look, we one-time framed up for 4 days. Now the dividend stopped that, plus we would have stopped it anyway. We are now, basically you can call this 14-day balance again. Remember, we had a 14-day balance here. This is 14 days again. Yesterday's all-time high is the top of it, and 363.26 is the bottom of it. So, again, it's not a big balance. It's only about, what is it now? Not even $10. We stretched it. So it's under $10. Any acceptance, if we stay accepted in here, again, destination will be the bottom of that balance, which would put us in the prior months, which is here, all-time high. Now, we have a short week next week. Unless there's a big catalyst, I think this market continues on the daily to probably stay in balance, maybe attempt another high, maybe push a little low, but I think we stay in balance. The bigger key is, are we going to be able to take out any of the weekly lows, or do we grind higher? Remember, it's pretty hard to short a dull market, so just be careful if we do decide to grind higher. It remains to be seen. Hope you had a good day trading. Have a great weekend, and we'll speak prior to the opening on Monday.